Welcome everybody to this first episode of Tradomics here on YouTube. My name is Dario, I am the founder of Tradomics, and in this first episode we're going to analyze Adobe. What happened during the last years, and we're going to have, by applying the cycle analysis, a forecast to what is going to happen or what will be happening to the prices. We're going to made a forecast projection by using a statistical way, which is basically embedded in the T-cycle analysis. So first of all, let's jump a little bit into the past. With this low that occurred on the 8th of March 2021, we have had a yearly cycle, a downward cycle, that in the first part of its development pushes the prices toward an absolute top by but after the 22nd of November in 2021, we started to experience a downtrend that ended in September 2022. This is a so-called negative downward yearly cycle. The duration has been of 325 days out of 338 days at T plus 5. But here we have had a Bayer thong, which is actually an extra time that occurred between two B yearly cycles. I remember you that a Bayer thong of 3 degrees less at T plus 3 is occurs between two T plus 6, and a T plus 6 is a B yearly cycle. Namely, the B yearly cycle is the first positive downward yearly cycle occurred here in March 2020. First yearly cycle, second yearly cycle that should have ended here, but here we have had an extra time of Bayer tongue, and in September 2022 it started a new B yearly cycle. As the other flip of the coin, we can actually do the same by having the upward cycles. So from the 20 February 2020, we have had a nearly upward cycle that ended on the 27th of August 2020. And from the 27th of August 2020, we have had another positive upward cycle, positive because the top in which it ended was higher compared to the top from which it started. And first yearly cycle and second upward yearly cycle gave us at least a B yearly cycle. From this absolute top, we had experienced also sharp downtrend. And when I say sharp downtrend, I always talk about time, because after more than 579 days, we haven't reached the top yet, and we haven't, as a consequence, break it down. Which means that from this absolute top, a big macro cycle has started. So here we have an hypothesis that this is a T plus 6, but it's also a T plus 7. A T plus 7 is a multi-year cycle between 3 and 5 years. Having said that, let's move a little bit more to what happened from 2022. So here we have had the evidence that a T plus 6 a B yearly cycles has started. A downward cycle that has done the first semester 6 months cycle and a second semester 6 month cycle. You can always measure the duration. The first semester was 156 days out of 168 without considering the hybrid cycles, and the second one has been of 96 days out of 94 as a minimum duration. The sum of the first duration and the second duration gave us a total duration of 250 days, which is a median duration for a T plus 5, which is encompassed between 190 and 338 days. Now, what is interesting to note, and this is why such type of analysis is important, especially to investors, is from this low, we have generated a new T plus 5. Here we have all the conditions because we have had at least more than 48 bars, here the bars, over this low that occurred on the 27th of February 2023. But after the earning release, with this low at $485, we broke up this minimum of swing that was the checkpoint of the yearly cycle, which means that, as the golden rule of the T cycle analysis, whenever there is a breakup of the minimum from which the cycle has started before its minimum duration, which is 190 days, the extension of the cycle will occur to the direction the price has been broken. So in this case, downtrend. So by applying the T cycle analysis, we can say that the extension of the price or the trend, or in other words, the downtrend, will last at least until 190 days. So at least the 1st of July 2024. This is a real advantage over other techniques because by measuring time, we already know that there will be a downtrend in place with some breaks to the upside, but we already know that the pattern will be up and then further down, up and then further down, up and then further down. At least we're gonna end the downtrend by the 1st of July, which is 190 days. But in the worst of the cases, and here I'm speaking mostly to investors, so that you are aware what is going to happen on Adobe. In the worst case scenario, the downtrend will further progress until 338 days, until 30th of January 2025. So be really careful now with the long position. Of course, we're going to have some breaks as mentioned. And now let's have a look at what happened to the last subcycle. So the first 3 months subcycle was 70 days. Now from here we had a T plus 3, and this T plus 3 is now lasting 47 bars. Now 47 bars is not even the minimum duration of a T plus 3 because it's 38 bars. So by today, on Monday 18th of March, we might have the necessary condition to close the T plus 3, theoretically. But we know that for the Matryoshka effect, we have at a first monthly cycle, and then we are having a second monthly cycle. The second monthly cycle has been broken here with this candle, and now the extension of the downtrend will occur until the minimum duration of 24 days. 24 days is by Friday 22 of March 2024. So we might actually expect another push to the downside, at least until the 22nd of March, which is Friday. But if we even zoom in and we go more into the details, what happened here is we have had the first weekly cycle and the second weekly cycle. Now the second weekly cycle has lasted 7 days out of 11. So we have now the necessary condition to eventually have a pull back up, but we might also experience a further downtrend. So the idea is that we're gonna might experience another downtrend at least for this for the next week, and then a push back up, or otherwise we're gonna have from today a push back up and then further go down. So the direction at the end of the day will be to the downside. Let's see if this week we're gonna have a bounce back up, but please be really careful because that bounce to the upside will not last long. To conclude the video, and if we go back more to the um, macro situation, this downtrend will be it's in line also with the fact that we have actually to close a T plus 6. So a closing of a T plus 6 requires at least a T plus 3 to the downside in order to get the cycle closed. So in order to close every cycle, in this case a T plus 6, we need a cycle of a 3 degrees less. In this case will be a 3-month cycle, so we need to have at least 48 bars or 48 bars at red, or that are actually are going to further down. And another important thing is which kind of level can we reach. So having broken this target at $499, another landing area is at 456 and 412. In the worst case scenario, we're going to also end up here at $351. We have more than 70 days to actually touch all these supporting areas. At the same time, from here, we have had a new T plus 5 upward cycle. This means that the price cannot go back to the stop at least for 3 months, because in order to generate a T plus 5, we need a 2 degrees less cycle where all the bars of the T plus 3 that are made in the T plus 5 cannot go back to the top. I hope this video has given you a flavor of what is going to happen to Adobe, not just for the next weeks, but also for the next months. Be really careful. Be aware that there are not substantial conditions to actually open longs for a short term. We are not here to give suggestion for investments, but at least we are here to make you more aware of the situation and to prevent yourself to hurt too much, and to evaluate the risks and but also the opportunities that Adobe can offer for the time being. Thanks for watching. If you like the video, please subscribe to our channel, and see you to the next episode.